While most investors chase headlines, a select few quietly cash out millions or even billions through something most people have never heard of: signature bonus derivatives. Today, we're pulling back the curtain on this secretive corner of the oil market, where timing, strategy, and smart money collide. In the world of crude oil, companies sometimes hand out upfront bonuses, cash or stock, to executives or strategic investors. On the surface, it looks like a simple reward, but the real magic happens when these bonuses are converted into derivatives. That's right. Smart investors take what seems like a one-time payout and use it to multiply their returns, sometimes exponentially. This is the playground of smart money, a place where knowledge, timing, and strategy turn ordinary bonuses into extraordinary gains. Smart money doesn't react to headlines. They anticipate probabilities. Timing the market is everything. By hedging with oil futures and options, these investors protect themselves from sudden price swings. They exploit volatility, knowing exactly when the market will move, and they use structured notes tied to crude benchmarks to amplify their returns. The result? Upside that can be staggering and risk that's carefully managed. In this game, insight beats instinct, and strategy beats luck. Let's break it down. First, there's the base bonus, cash or stock handed to an executive or investor. On its own, it's a nice reward. Next, the bonus is converted into derivatives, swaps, options, or futures. This lets investors gain leveraged exposure to oil prices without directly holding barrels of crude. With the right structure and timing, the payoff can be astonishing. Imagine receiving a $10 million bonus, then converting it into an energy-linked derivative that grows to $50 million in just a few months. That's the power of these signature bonus structures. Let's look at some real-world examples, anonymized to protect identities. In one case, an oil field executive converted a multi-million-dollar signature bonus into structured notes linked to crude benchmarks. By timing the market and leveraging derivatives, the payoff was several times the original bonus. In another example, a hedge fund anticipated geopolitical shifts affecting oil supply. By strategically using crude futures tied to signature bonuses, they quietly turned a single payout into a 5 times return in just 3 months. The key takeaway? It's not luck. It's timing, insight, and the right derivative structure that create stupendous results. It's not magic. Even the smartest investors can get burned, miscalculate timing, misstructure a derivative, or fail to anticipate market swings, and even $1 million bonus can vanish overnight. Market volatility can be brutal. Political upheavals, sanctions, and regulatory changes can all disrupt crude markets in ways that no model can perfectly predict. And let's be clear, these strategies are complex. Executing them requires expertise, precision, and a deep understanding of oil markets. One wrong move can erase gains faster than you can imagine. Smart money isn't reactive. They anticipate, hedge, and act long before the rest of the market even notices. They study production cycles, predicting when supply will tighten or swell. They track geopolitical events, understanding which news could shift oil prices. And they follow institutional flows, not the frenzy of retail traders chasing headlines. This foresight is what allows them to cash out stupendously, turning calculated insights into massive gains. You don't need to trade these signature bonuses yourself. The real lesson lies in observing how smart money moves. Track regulatory filings and corporate disclosures, not the headlines chasing every oil price fluctuation. Study derivatives and structured products to understand how risk and reward are engineered. And take note of market psychology, how institutions anticipate behavior, sentiment, and opportunity. By watching closely, you can learn the strategies that move billions, gaining insights that could guide your own investment thinking. Signature bonus derivatives are where the real smart money plays. With the right timing, structure, and insight, modest payouts can turn into astonishing wins. If this peek behind the curtain blew your mind, like, comment, and subscribe for more insider-level market strategies and stay one step ahead of the crowd.